Even the people that talked about inflation originally, like Keynes, for example, would point out that it partially works because people don't know what's happening, right? If, in some ways, uh, if for example, a government had a 2% inflation target, and they met that reliably, and it was actually reliably measured, you could say that it's not theft in the sense that it's transparent. It's just like it's a type of tax that exists out there, that if you hold money, you're slowly going to lose some of its value to this type of inflation dilution tax. But the fact that inflation happens in a bumpy way, that's not properly measured, it's hard to even properly measure, period, and that in certain regions happens very quickly, makes it in many cases effectively a type of theft, especially when it happens in such a centralized way.
Markets appear to have batted away. Next month's Federal Reserve gathering as a pause also ran meeting in favor of second-guessing about a November rate hike, but next month may hold the key to finally unlocking the end of the tightening cycle. Fed Chair Jerome Powell was almost brusque in his restatement of the central bank's anti-inflation commitment at the annual Jackson Hole Symposium on Friday. Without a significant new policy twist, his doggedness about the job at hand finally seemed to hit home. After an edgy few weeks of repricing as the U.S. economy re-accelerated in July and forced a reassessment of the long-term sustainability of the new higher interest rate regime, traders seem to finally agree with what policymakers have been saying since June: there's one more hike to come. For the first time since the SVB bust and regional bank crisis in early March, futures markets moved briefly this week to show as much as a 60% chance of another policy rate rise to the 5.50 to 5.75% range by the November 1 Fed meeting. Lyn Alden, who just published her new book, Broken Money, discusses the past, present, and future of money, and why the current financial system is letting a lot of people down lately. She focuses on Bitcoin and why it remains the best hedge for inflation and financial security. Let us now get into the video. Don't forget to like, subscribe, and drop your comments below.
Basically, when we think of Bitcoin, there's like this age-old question, like, what is Bitcoin? Because it's like Bitcoin keeps revealing new facets of itself to us, or at least if you go back at like the Bitcoin talk forums, most of these things that the market is still discovering were like addressed early on, and different facets of Bitcoin take on more meaning once something gets developed, like say Lightning, or when AI comes around, or when stablecoins are invented. These sort of things add new ways to think about Bitcoin or to use Bitcoin. The way I would describe it is basically what a blockchain is a decentralized database, and it just so happens that the killer app for a decentralized database is money, because money is constantly looking for what is a ledger we can all agree on. We might agree to use dollars because it's the fiat currency of the most powerful country in the world right now. We know that over the course of the next 6 months, they're probably going to be fine dollars, and so we can use that workably enough. We might use gold because we both understand that it's the commodity that's best kind of useful as money. And with a database, when you find one that's sufficiently decentralized and immutable, and you say, wait a second, this is basically money in a decentralized cloud. I can hold a unit of this or units of it, and I can either send it to anyone, or I could remember my words and travel around the world and reconstruct my ability to access it there. And so there is that utility aspect.
Get the ultimate sports fandom experience and reward for passion with TeamToken, the world's first true sports utility NFT. With TeamToken, all the thrills and excitement of the game get brilliantly amplified with the endless possibilities of blockchain technology. Do you want the complete, immersive experience of being not just a sports fan, but also the proud owner of a digital asset that gives you a stake in your favorite sports teams? TeamToken helps you achieve this and more. All you have to do is purchase your Team Tokens, buy your favorite team's team NFT in the marketplace, and win amazing rewards each time your team scores a win. TeamToken runs on the Ether blockchain, which is known for its top-notch security and global acceptance. You can always be sure of your token security while pursuing the ultimate fandom experience. Do you want to be sufficiently rewarded for your passion and be more involved in your team's story? Then you need to be a part of the ongoing presale event through the link below. It's going to be huge, exciting, and rewarding. Click the link in the description box and participate in the TeamToken presale to completely redefine your sports experience.
And I think the vast majority of its long-term usage will be for money, just because money is such a big application and it's so suitable for it. But there are other things like data storage. People have put arbitrary data into the blockchain that they want to preserve there. It doesn't prove that it's true, but it proves that it's not tampered with from the point of insertion. And so it could be putting culturally relevant books in there. It could be timestamping other systems into it. Whatever the case may be, I think that is a long-term use case that I expect it to be smaller than money. And then there's other things. Like you can use it as a network. Like you can use Lightning as a network to run around stable coins, for example, in a way that is cheaper than Ethereum. That's a similar reason why Tron popped up, is because people wanted to use Tether more cheaply than they can use it on Ethereum. And so generally between Bitcoin and stable coins on other networks, money's been by far the dominant staying power use case for this whole field of technology. And most other stuff becomes like a narrative and then it's kind of fades away into either obscurity or at least a smaller market. When you look at some of the literature, basically like Mises or further back, it's the most saleable good, which means it's basically the most liquid good. Like what good could you bring with you as a bearer asset that you could find someone pretty quickly to take it off your hands at something close to the market price? Like if I have a fine bottle of wine that's worth like, I don't know, $300, if I just wanted to quickly dump that on the market somewhere, most people don't know how to evaluate wine. Most people don't even know. So it's a very specific type. And so I'd have to find someone and probably give it to them for like $100 or something like that, because I'd have to find someone who basically there'd be a lot of slippage in that transaction unless I happen to find this like right wine shop, right? So it's like unless there's certain areas where I could get full retail price or full price for it, but the ease of which I can do it is low because there's low liquidity, low fungibility, that kind of thing. So when you have a good money, you have one that's got plenty of liquidity, plenty of accessibility. And the fine line there is if you have a money that is not divisible enough or not fungible enough or is like hyper rare, like it's like rhodium, for example. Most people don't have any. Most people don't identify it, and so just because it's super rare doesn't mean it actually gets monetized. And so it's kind of a weird accident of history that the things that get monetized are things that are quite rare, but that they're already widely held. And so those tend to be things that are hard to make, but that they're long lasting once they're made. And so we build up pretty significant stockpiles.
The United States Securities and Exchange Commission is facing its first deadlines to decide on 7 spot Bitcoin exchange-traded fund applications, with the latest being September 4 amid its defeat to Grayscale Investments in a U.S. federal appeals court. Investment firm Bitwise will learn if its ETF will win the SEC approval on September 1, while BlackRock, VanEck, Fidelity, Invesco, and WisdomTree will all be awaiting the SEC's decision for their funds by September 2, according to several SEC filings. Meanwhile, Valkyrie is set to hear back from the SEC on September 4. The U.S. Court of Appeals ruled on August 29 that the SEC rejection of Grayscale's application to convert its Grayscale Bitcoin Trust, GBTC, into a spot Bitcoin ETF was arbitrary and capricious. But this doesn't mean the SEC must approve Grayscale's application or others in the future, says Bloomberg ETF analyst James Seifert. In an August 29 Bloomberg interview, Seifert explained that Grayscale's win definitely increases the odds of a successful outcome for the next wave of applicants. He isn't sure when that day may come, though, as the SEC can delay its decisions and has 2 more proposed deadlines for each fund before being forced to make a final decision on the 240th day post-filing. For the awaiting applicants, the final deadlines for the SEC are all in mid-March next year. After the August 29 ruling in favor of Grayscale, the regulator has 90 days to file an appeal with the U.S. Supreme Court or apply for an en banc review, where a full circuit court can overturn a ruling made by a 3-judge panel. However, the SEC hasn't made clear what its next move will be. If the SEC doesn't appeal, the court will need to specify how its ruling is executed, which could include instructing the SEC to approve Grayscale's application or at the very least revisit it. Do you think the SEC would approve Grayscale's application? Can you provide reasons for your answer in the comment section below? Also, please don't forget to like the video, subscribe, and turn on notifications. Thanks for watching.